Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So this week I want to cover off staying on top, and one of the things that happens is the market changes underneath our feet, and we need to be aware of that. And how do we do that? And one of the biggest tools, so I have my Schnell strength indexes that I created to try and help me with some stuff. There's all kinds of breadth indicators. There's different percentages that you might want to keep above. So percentage of stocks in a group above a 20-day moving average or a 50-day moving average or that type of thing. And again, the market can go up with fewer and fewer stocks, and as it does that, then what we need to be aware of is at least the changing trend so that we're not caught at the top fully invested and all of a sudden the whole market rolls down and we give up our gains. So one of the things I wanted to do was talk briefly about just altering scans to see market action, and I get requests for me to write scans for people, and quite frankly, I don't have enough time to write everybody's scans, but there are lots of examples of scans already built. So those are good to use. I would also suggest that one of the things we want the scan to do is to try to bring forward results that we could use, or just in general keep track of how bullish a market might be or how bearish a market might be. So all of those using the scan tools, we can pick that up. And so I'm actually recording this on the week of August the 17th, as I'm out of town this week. But the reason I'm recording this particular one is the market was chopping around at the highs, and when we get into the charts we'll see that it was a pretty rough day that I was recording this, but it also helps us talk about market action, and it's a good time to just step back and take a look without being so involved in the day-to-day. If you're interested in the work I do, you can go to the gregschnell.com website and you can use the /explore edition, and what that would give you is, rather than the $860 membership, a membership for just $497, and you would save $363. And I've called it the Mining the Metals membership sale, and it goes until the end of August. So if you're interested in that, feel free to go there. But one of the things I try to talk about is the four pillars of the economy: currencies, commodities, equities, and bonds. And then depending on what jumps out each week, I try to highlight that in a newsletter and a 1-hour video. So hopefully, if any of that interests you, head on over there and you can find all that kind of stuff. First of all, so the day I'm recording this is Tuesday, August the 17th, and the Dow's down 300 and the Nasdaq's down 164. So it's a relatively rough week. Percentage up on the NASDAQ. There's always some big names that are flying up there with different technology companies. And then the percent down is really having a big day as well. Lots of big movers to the downside. So again, that's why I picked to just kind of do a recap about how to stay on top of that. So one of the ways to do that is to use the predefined scans. And the other way I'm going to talk about first is just going in and picking up something very simple. So I have a chart list called the NASDAQ 100. And again, if you don't have one, you can quickly do that. You would go down here and you would just say, you would pick an index and whatever, if it's the NASDAQ 100, and you would add it, and then you would save that as a chart list. What we're going to do, because I've already got a NASDAQ 100 chart list, is we're going to scan that for a few different things, and we're just going to play around using that group. So when I look at a scan, real quick, right, I need to have a list to scan, or I can just scan the general market. And in this case, I'm just looking for how many stocks on the NASDAQ 100 are above the 20-day moving average. And up here, this 2 slashes means I'm not looking at whatever's on this line, or the scan engine won't look at on that line. And one of my favorite scans to do in clean tech is to go through and look how many stocks are just above the 20-day moving average. So I would run this scan. So anyway, so I'm going to check the NASDAQ 100. I'm going to look for stocks above the 20-day moving average. And then we're just going to run the scan. And when we run it, we get 57. So out of 100 stocks, 57 are above the 20-day moving average. That's okay, but again, the 20-day moving average is kind of the center of the daily Bollinger Bands. Now, if we wanted to alter that and just say how many stocks are above the 100 period moving average, we can just quickly do that, and that's going to tell us 64. So of the stocks that are broken down, and what's the significance of the 100-day moving average? Well, it's the 20-week moving average as well. And so what we're looking for is the percentage of stocks above the number of stocks above the 20-day moving average is how many are above the top half of the Bollinger Bands. And when we do that, to say how many stocks are above the 100-day moving average, now we're checking for how many stocks on a weekly basis are above the center of the Bollinger Bands. And here what we find is not much different. So basically the daily stocks that are broken down, 57 of them, are below their 20-day, but they're also below their 100-day. And then there's an extra 7 stocks that are still sitting above their 100-day moving average. So that tells us quite a bit. So we have 43 below the 20-day moving average, and we have 36 below the 100-day moving average. So quite surprisingly, out of the NASDAQ 100, it's not so heavily swayed as you might think. Now, we could run that scan on the whole market, or on a group of stocks, like we could run it on the NASDAQ as an example. So we could just say to run it against some sort of list, we can go in and pick that list. So we can do an S&P 500, and if we don't specify a specific index, then we're just going to run the scan on anything. So we just want to know what stocks on the NASDAQ are above the 100-day moving average. So we would just say exchange. We would add, and in this case, we would just type in NASDAQ as an example. And whenever you run your scans, what you want to do is you want to have the biggest limitation first. So in other words, no sense going searching through all of the stocks to find out which ones are above the 100-day moving average or the middle of the weekly Bollinger Bands, and then only want the ones from the NASDAQ. So we're better off to identify the NASDAQ first. It makes our scan engine quick, and it also makes it so that we don't waste resources on taking a long scan to run. So we narrow it to the NASDAQ, and we say the close, and we want to know how many stocks are above that moving average. Now we hit run. Okay, so we've got 1,442. Now, we could pick how many stocks are above a long-term moving average, and that would help tell us. But in general, what we see is quite a few stocks are still above the middle of the Bollinger Band. So that's a pretty good sign that the market's healthy. Now, when we look at different scans, we can also go and specifically request something. So we can say for the scooters, pick either a specific scooter level, like large, mid, or small. And we know that the small caps are kind of been beaten up lately. So that would tell us exactly how weak the small caps are. But I think what's more important is when we just want to look at the scooters in general, and we can pick some level. And again, the one I like is 75. So you're better than 3/4 of the stocks out there, or 75% of them. So we can just turn off the moving average scan and just have it with this one, and we'll just delete these other lines out of there. So in general, I'm searching for anything that's lit up here in color. So exchanges, NASDAQ, and the scooter ranking is greater than 75. And when we run that scan, now we get 643. So it tells us that we still have a lot of very strong stocks, and when we sort them by sector, A lot of these are ETFs, so they don't show up as a sector, but here's communication services, and there's quite a raft of those, right? That's a pretty strong group. So we're seeing pretty good price action there. And when we could save this to a chart list just to work with it. But I think the important thing to be aware of is that as we use this charting engine, we can start to define what we want to watch for. And that most people, I would say, are kind of unaware what's going on in the background. So I have a scan that I run every week. And I ask myself how many stocks are above how many stocks moved more than 10% higher last week, and how many stocks moved more than 5%, and how many stocks moved less than 5 and less than 10. And it just gives me an idea of what to watch for. So this week, while the stock market is, let's just go back to the dashboard just to kind of set the table here. Waiting for it to fill in. If we go to the NASDAQ, just to pick an example. So what we see is the stock market's been sideways for roughly 6 weeks now. And we've had declining momentum, which is okay. But last week, for the first time, the week before it was about equal. And then last week we had 3 times more stocks down 10% than up 10%. And we had a double of the number of stocks down 5% over up 5%. So what that tells me is that, even though you're finding some big stocks moving up, the likelihood that other stocks are moving down just as aggressively is pretty strong. And so you're trying to find strong stocks, but in the meantime, you've got a portfolio of 10 or whatever, and 3 are moving up quickly, but you might find 4 or 5 moving down quickly. And it's that contrast that we can start to use. So as an example, just sitting here on the weekend, and in my newsletter, I wrote, it feels to me like the NASDAQ could just as easily whoosh down lower or break higher, because it's sitting here trying to break higher but can't. But we really have to watch to see if it's going to start falling aggressively, and that is because so many stocks are moving down hard. So using these scan tools, we can try to identify that type of information. Now, the one thing that StockCharts does give us, let's just X out of here. The one thing that StockCharts does give us that can help us is over on the charts and tools page. We can go in here and there are predefined scans. And what those do is they already have the parameters built into a scan, and we can use those parameters to create our own charts or our own scan engines to find the answers we want. So here is an example of a bullish 50 to 200 day moving average crossover, and if we go look at the NASDAQ, there's 7 of them. So we can click on that chart or that list, and when we do that, it comes up with this. But one of the other, so let's just go look at the chart, and we need to add a couple of moving averages here. So simple moving average, and so what we're seeing right here is this positive cross. Now, this negative cross actually came pretty close to marking the bottom, and this one, you can see we've gently tried to uptrend here, but haven't been able to break out to prior highs. So it's a good question whether or not the stock market still can. We have an uptrend that we're sitting right on. So it's not one of my favorite scans, but at least you'd have the tools there. And if you wanted to instead scan for, the percentage of stocks above the number of stocks that had a 20 over 50 cross as an example, what you could do is just go in and modify that scan. So let's go to the NASDAQ, and up here in the top right hand corner, click here to edit this scan. And what we would do is, rather than say the 200 day, we would say the 50 day, and rather than say the 50-day, we want to say the 20. So the 20 is greater than the 50, and yesterday's 20 was less than the 50. And so what would this give us? This would give us the number of stocks that are starting to make a bullish turn higher. So we'll click on an example. And let's just go get those settings again. So here's a 20-day, and now a simple moving average scan, a 50-day. And what we see here is this is starting to turn up, and you can see it's been running down for quite a while. But anyway, the stock is turning up. Well, we could do this with 8 and 5, or 5 and 13, or 8 and 13, or 8 and 21, or 13 and 34 is a common one. We can pick any sort of scan numbers by just altering these scans and try to get a feel for that. So if we go to the a period where we know was weak, whatever we could say 300 trading days ago. Let me just make sure I did that right. 300 trading days ago, and that was June 9th. So let's just try to pick around the end of March. So 370 trading days ago. And that's going to put us at February 28th, so we want 350, just to pick it. And the idea behind this is, so this is March 27th, just as the market is turning up. And so we try to run that scan, and there was only 4 or 5. And then what we want to watch for is how that changes as we go through time. So now instead of 350, we're going to pick, just keep moving through the dates and just see how the results change. So none of them were starting to turn up there. And then 348, run scan. None of them were starting. There we go. A few more starting to show up. And so just by working through this, we can start to see how effective is the scan, and would it have helped us get in earlier back in the turn of the market. So we're going to go to that Wednesday, run scan, and let's just make sure. Okay, so it's running, and then we're going to pick up another day here. Just keep working through, and all of a sudden we should start to see a big jump, right? While these stocks start to turn. So that's the kind of thing that we can help use to find these, and even if it's just getting us going, we can go. It's a hint, right? It's like, how many stocks are doing this? Well, not many on this particular day, and then all of a sudden we're going to find out that a whole bunch of them did. And if we think about the severity of decline, it could be just because they were pointed down for a long time. That maybe this is too easy a scan or too late a scan. So perhaps after the big decline we had, we want to use something like 8 and 5 or 5 and 13. My point is, don't take the scan just because it's a 50 and a 200 and assume that that's a magical scan. I think what you want to do is find, is it short enough time frame for you, or is it highlighting the type of thing you can do? This is a really important function up here where you can go back and just kind of look at the results and just see how fast it was turning. So if you have a stock market in fast decline, you can sit there and wait until the 50 crosses over the 200 again, and that would have been a long time coming. Let's just go pick a chart here. Whatever, this is a stock. Let's pick Apple just to be different. And then go back to include 2020. And what you see here, the whole idea behind having these moving averages is what you're trying to find is something that gets you out near the top and gets you in near the bottom. And all of a sudden this pink, kind of the 5th of April started to cross. And that was not a bad place to be on board for pretty much the whole run in Apple. It actually just came to a cross, and literally as it touched, it took off again and went on a final ride. So it's at least a place to look or a tool to use. So you don't want to use the 50 and 200 because we would have been sitting here waiting until the end of April and would have lost probably, $10 in Apple that we could have been involved in after the stock turned up. And the whole time it stayed above its 200-day moving average, which is pretty meaningful. So using these scan components or the predefined scans, you can pick what you like. Now, I have one chart list that I work with to write my newsletter, and when I write it, what I do is I take whatever, let's just go to SPX, and then I'm going to go down and grab my chart list. But one of the things that's been showing up lately is the percentage of stocks above the 200-day moving average has been pretty weak. And so if we looked at the NASDAQ composite, so again, the composite is all of the stocks on the NASDAQ. So this is for the NASDAQ above 200-day moving average, and it's what percentage of stocks in this group are there. Well, on Friday, August the 13th, what we found was we had 41%, 41.7, and on Monday, August 15th or 16th, we were down to 40%. Now, what's really odd about that is historically, when the market's this weak, we've already had a correction. And so it's pretty odd, but the point I was trying to make in my newsletter was that, well, this market was falling apart. This indicator, and this one's a StockCharts standard indicator, but you could have changed your scan to check what stocks are above the 200-day or the 50-day or whatever. And one of the things StockCharts allows us to do is take that same indicator, and they've got it set up for the 50, the 150, the 200-day. So those are different periods, but you would just go get price here. Whoops, not price performance. You would go get price off this index, and instead you want the NASDAQ 50R. So what percentage of stocks are below the 50-day, and we want to do it in a histogram. And we want to do it in gold, and we want the height to be 1, and now we run that scan. And what we see is 31% of them are above the 50-day, and 39% are above the 200-day, which is the long-term average. Those quick things to me tell me that the market's pretty weak, and I told you about my percentage of stocks or the number of stocks that have moved up 10% versus 5%, and vice versa, down 10% and down 5%. The idea behind these scan tools is they can help highlight either the stocks that are moving down big, moving up big, or we can use these to help confirm the weakness we're seeing in other tools. So when this is sitting here at 41%, and I'm looking at the chart every week, it's come all the way down from a high way up here at 80% at the beginning of the year to now 40, and yet the stock market is still hitting new highs. You have to wonder how long that's going to work out. And the other point I was making in the newsletter was when it's down, after it's had a big run like this, it can actually fall and spend 2 or 3 months down here before it starts to revert higher. So when you have a big, strong market, it's pretty important that you're aware of historical precedent. Now, in 2010, which was after the 2009 low, we got down to this level, and we spent another month or whatever getting weaker. But look what the stock market did. It was down. This was a meaningful peak to trough in 2010, and then the Fed came back in with more improvements, ran up the market till 2011, and we did the same thing. So we're sitting here wondering, what percentage of stocks are above the 200-day moving average? Only 40% of them, and yet we know from history that when the market gets this weak, it can actually spend months down here, not just a couple of days. So it's clues like that we can use from the scan engine to try and get there. So my point would be, if you have some sort of scan criteria that you like to use, don't be afraid to go to the StockCharts predefined scans, and that's in here, over here on the right, and then pick one that you like, whatever, moving above upper Keltner channel, and click on that, and then you can go in and alter it, or you just want to keep track of the market by knowing how many stocks in an industry group are above their 20-day moving average. So when they all start to fall below, now you're at the bottom or the lower half of the Bollinger Bands. Perhaps that's a better group to avoid than taking it higher. So try to use the scan engine not just to give you names to go buy and sell, but to give you larger context in the market and get a feel for the improving conditions. So I have a trading community that I kind of chat with back and forth, and it's almost it's not a surprise that when somebody's getting very bullish in their portfolio, that all of a sudden they get their head handed to them. And the reason is because they're in one thing and it's working really, really well until it doesn't, and then it really moves down hard. And a recent example would be I was in the oils and they were coming up against $76, and I'm saying, if you're a short-term trader, you probably want to take profits off here. And so I sold a few stocks, but now in hindsight, I wish I'd have sold even more because they were breaking down bigger. And I've since sold a few and tried to maintain some of that profit. But the idea being, be aware of the whole thing rolling over, and when it's getting euphoric, there's some clues there as the weaker ones start to fall away, the stronger ones are holding up, and then all of a sudden the stronger ones start to break down. So the stock market is a collection of stocks, usually within industry groups that kind of move as a group. And so if the banks are moving up, or the insurance companies, or the oil companies, or the copper companies, or clean tech, or something like that, you've got a theme. And when that theme starts to change, use these scan engine tools to try and help understand that change. So the one scan that I use for my electric vehicle scan every week, and I just got to go get the scan engine, is just percentages or the number of stocks within this chart list, my EV chart list, and then I'll say run this scan. And the scan is just the list and how many closed above the 20-day EMA. Well, last week the same thing was 135, and this week it's 65. So it's changing quite quickly, and if we're not aware of that kind of subtle change, we can be sitting there holding EV stocks, and all of a sudden they plummet very, very fast. So these simple scan tools can try and help us make sure we don't get caught offside. So again, if there's some ideas for scanning, I would strongly encourage you to go look on the scan engine at StockCharts, because they have some really good tools for you. And if you go into Edit Scan, right at the bottom here, scan examples, predefined scans, writing scans, instructions. These 4 things can also help you work your way through. So with that, I want to leave the scanning. Again, if you have any interest in the work over at gregschnell.com, go to gregschnell.com/explore, and you can save about 40% off an annual membership. There's always a 2-week free trial there that you could go in and try it. And if you don't like it, no harm done. But give it a shot, because I think one of the things that my newsletter does help people do is understand the problems in the market, the opportunities in the market. Where are we? Are we starting to improve, get worse? And try to be just a little bit more informed, rather than just trying to follow a group of stocks and all of a sudden get hit. So thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.